I traded marijuana stock options as suggested by a viewer. Let's see how it turned out.
I'm buying options contracts both ways on TLRY.
Let's go over options basics so you guys can follow along. When you expect the stock to go up, you buy a call option. When you expect the stock to go down, you buy a put option. When you expect the stock to make a major move, but you don't know whether it will be up or down, you can use what is referred to as an option strangle, which is a combination of a put and a call. For example, if a stock is at $100 and you expect a major announcement that could be good or bad, you can buy a call option at 105 strike and a put option at a 95 strike. The cost of the options contracts is called a premium. Each contract is for 100 shares of the stock. A $1 premium values the total cost of the contract at $100. So going back to the example, the option strangle covers a $5 move in the stock. My cost of the premiums per share is $1 for the call and $1 for the put. In order for me to make money on this trade, I need the price to go above 107 or below 93 before the expiration date of the stock option. These options are only valid up to a certain expiration date. If the stock stays in between these prices, I have lost money on the strangle.
You know what? I'm kind of gonna be a wuss on this, and I'm just gonna buy one option both ways. Yeah, let's go ahead and do this. I'm just gonna keep the size of this super low though. Expires on the 22nd, and we'll hope earnings kind of works out for me.
I just want all of the money. Do you know what
It is a top-line beat for Tilray revenues. They're coming in at $15.5 million versus analyst estimates of $14.15 million. Now, that's up 110% from last year.
You know, honestly, the trade was a good trade, but I somehow managed to screw this up as well. So I had done an option strangle on Tilray mainly because I was expecting explosive movement either to the upside or to the downside, mainly because marijuana stock tends to just move all over the place.
So yeah, I have options going both ways on Tilray right now. We'll see if this works out for me.
I bought the call option at $3.45 and I bought a put option at $3.15. Basically, the premiums I was paying on those options contracts were huge. Essentially, for those options to be in the money, I would have needed a 10% move.
So yeah, I got rid of my Tilray put options. I don't think it's gonna drop $7, $8, $9, so I don't see that being profitable. I got rid of it at basically, I salvaged half of my investment, about $200, so I'm actually pretty happy about the way that turned out. I'm looking for a good exit for the call option.
Following day, I sold off my options at about half the price I bought them for, and you know, I lost $300 on the trade, but it is what it is. You know, had I actually done the trade when he had suggested it, I would have made a lot of money, you know, because it had a huge move before earnings. Having said that, after earnings, the movement was pretty muted. I looked at the options, I saw that they were, they lost about half of their value the day after, so I ended up just selling it. If you take a look at how much the market had already priced in options-wise, it was expecting more than a 10% move. There was already expectation that Tilray would move a lot in the market. If you guys have any other trades in the future that you want to suggest to me, and I'll take a shot at them, I'll do them on camera.